Hi everyone, and welcome to this live webinar organized by FERMA, the Federation of European Risk Management Associations, together with its US counterpart RIMS, the Risk Management Association. My name is Typhaine, I am the CEO of FERMA, and I'm delighted to moderate this joint webinar addressing the way risk managers in Europe and in the US have experienced and dealt with the global pandemic. And it's great to see so many people today from both sides of the Atlantic. So please do not hesitate to join the discussion by leaving your questions in the chat box. We will take them during the Q&A session after the presentation. So the webinar is organized as a discussion between myself and the panelists. I will present the results from the FERMA COVID-19 survey and ask our two speakers to react and share the perspective. So like that, we will have a transatlantic view on commonalities and differences. And today I am joined by two outstanding European and US-based risk leaders, Athina Pehrman, our European representative, and Melanie Steiner, our North American representative. Athina is the group risk manager at Electrolux Professional, where she is responsible for risk and crisis management, business continuity, loss prevention, and insurance management. And she is currently leading the group crisis management team handling the COVID-19 crisis. Athina is also the president of the Swedish Risk Management Association, which is a member of FERMA. And she has been nominated for the European Risk Management Awards 2020 for the category COVID-19 Outbreak Special Award. Welcome, Athina. Melanie is on the board of directors for US Ecology, a leading North American provider of environmental and waste services, where she leads the Corporate Responsibility and Risk Committee and is a member of the Audit Committee. And for the last decade, Melanie held a strategic chief risk officer role at PVH Corporation, which is the owner of brands like Tommy Hilfiger and Calvin Klein. Melanie has recently been named a New York Moves Magazine 2020 Power Woman honoree. I'm really looking forward to discussing FERMA survey results with both of you. So let's start by introducing you to the survey that FERMA conducted this summer among the European risk managers on their experience of COVID-19 crisis so far. So I'd like to stress that while we are still dealing with a pandemic, the results should be seen as a first Europe-wide look at risk and insurance management during COVID-19. We received responses from 314 respondents in 21 countries and from a good mixture of sectors. So you can see on this slide that the top 5 are manufacturing, utilities, energy, telecommunication, transport, and then construction. So we can say it's a balanced representation of sectors. And the replies give a sense of where risk managers were before the crisis, during the crisis, and how they see the future. They also provide a quantitative contribution to the policy discussions that we are having now at the EU and national level. But let's zoom into the results. We have asked risk managers a series of questions about their pre-crisis preparations, because we wanted to get a sense of their thinking over a year ago. And the survey shows that a global pandemic was not part of the majority of organization risk register. Only 31% of those surveyed had a global pandemic on their radar in September 2019. But at the same time, the chart on the right shows you that over 85% of risk managers felt reasonably well prepared to manage a pandemic over a year ago. So it's important to stress that it's not taking into account the government actions in response to the pandemic. So I'm turning now to you, Athina. Could you briefly present your company and tell us if these results accord to your experience?
Thank you, Typhaine, and good afternoon and good morning to you all. Happy to be here. So I work for a pretty new company, which was formed just 8 months ago. Our company was then separated from the Electrolux Group and listed on the Stockholm Nasdaq Stock Exchange as a standalone company on the 23rd of March this year. And I just joined the company 5 months before the listing. We manufacture and sell professional equipment for food, beverage, and laundry. So, for example, kitchen and laundry solutions for hotels, restaurants, and hospitals. So, was pandemic risk on our risk register? As we were separated from the Electrolux Group in March this year, our own ERM framework was implemented when the pandemic had already turned from being a risk and became an issue. But when asking several Swedish risk managers if they had captured a global pandemic in their risk register a year ago, many of them said they did have pandemic risk, but not as a top risk and not as a global risk, but rather a geographically limited risk with less severe consequences that we are seeing now. And maybe that is also the case why you see 69% answering no to this question. So do I believe that this pandemic was a surprise to many of us? I think countries in Asia have experienced SARS, MERS, swine flu, and many other similar events in the past, and these pandemics were more or less limited to that region. I believe the magnitude of this pandemic was a surprise to most of us, myself included. This is, of course, an eye-opener. We should never rule out potential risks, even if they are very unlikely to materialize. And in addition, this global event has shown how connected we are in business globally and how risk in one part of the world can trigger multiple very different risks worldwide. So one example is the health risk that we're now seeing from people working remotely at their kitchen tables, just like Melanie and myself here on video, with very little social interaction and not very good chairs and equipment. But also the forced lockdowns creating increase in domestic violence and abuse against women and children. I don't think that was very easy to foresee as a risk. So I think for the future, not to be equally surprised, I think we already now need to start preparing for climate change risk, as that is most certainly the next major global event that we will be facing. That's my view on it, Typhaine.
Yes, thank you very much, Athina. And Melanie, so what was the situation in your company pre-crisis, basically? Did you have also the pandemic on your risk register?
Yeah, so just to give a very brief snapshot, I sit on a public company board based in the U.S. in the environmental services industry. So I can speak from a board perspective, but also as a chief risk officer who was in that post prior to and during the initial stages of COVID. So it was really complicated days, and certainly from a senior leadership perspective as well as board perspective, I can very much agree with Athina that pandemic was not really on anyone's radar, and if it was most certainly part of another risk. So for instance, companies that have business continuity risk or other sort of big bucket risks might have put it in as a little subnote. But it was never anticipated to be something at the scale and gravity that it ended up to be, in the sense that it was fully global and impacted every aspect of the organization. And so as a result, it really forced companies, including risk leaders, to completely rejigger and create new governance structures to manage all of the fallout. So everything from the early days, which was liquidity and financial strain, as well as health and safety issues for employees, and then all the way through to further risks down the line, such as supply chain operations, etc. So extremely complicated, definitely not foreseen. But I do agree with Athina. We're living in a very volatile environment where anything can happen. You know, in the US alone, from that perspective, we didn't just have COVID, but it was really a layered crisis, because we also, you know, there was the economic fallout and economic crisis with, you know, millions of unemployed. And then on top of that came the social equity, Black Lives Matter crisis, which became a huge issue, and they were all converging at the same time. And so I think, you know, to Athina's point on climate change, you know, if you want to be a successful company, go forward, and we'll talk about that, I'm sure, during this hour, you have to be able to act quickly and be prepared for anything.
Yes, you need to anticipate. Huh? Yeah, for sure. Thank you very much, Melanie. So we will now turn to risk management practices that were used to stem the crisis. And the survey shows that over 1 in 5 of risk managers mentioned the quick pivot to teleworking and the related cyber risk management aspects, the setting up and operation of dedicated task forces or crisis units, and lastly, and importantly, the use of a business continuity plan. So we can really see that these are risk management practices that are generally used in a crisis. If we move to the business continuity plan as such, we can see that 74% of the risk managers had a BCP in place before the crisis. So while the BCPs were not designed specifically with this outbreak in mind, the results of our survey reveal that they were a useful and adaptable tool to assist the organization. So they helped identify critical function, processes, dependencies, and of course also to make sure that their business is kept running. So Melanie, what's your reaction to these good practices? Do they seem about right?
Yes, I think yes and no, in the sense that it's always handy to have a plan, and for that plan to be more than just something that you put on a shelf gathering dust. So in other words, it should be updated regularly. There should be tabletop exercises, and there should definitely be a tone from the top that it's important, and that that business units and leaders need to pay attention. So yes, I agree with that. But that said, you know, if you ask many CEOs and leadership teams who were dealing with the pandemic, they will tell you that there was no roadmap. And the reason, and even if you had a plan, you really kind of had to start from scratch, because, you know, as I mentioned at the outset, the scale of this was so enormous, hitting, you know, especially for multinationals operating across the globe. You had different stages of the pandemic in different places. You had issues hitting all over the place, and there really was no map. But the good side of that is that gave leaders, I think, a lot of license to move and to be creative about how they handled this process. So the good leaders, I think, acted extremely quickly and put together what I call either a war room or just some form of what I like to think of as a hub and spoke model, which I can talk about a bit later as well, but essentially where you have a leadership group that's handling the core and the communication, the coordination, if you will, and then really every single risk issue or issue that is coming out of the pandemic became an important vertical, and there were leaders for each of those. And so what becomes important early on is that you galvanize the team, you set roles and responsibilities so that everyone knows what they're doing, and you make sure that you're covering all your core issues. So to your point, Typhaine, earlier, you're keeping the business running and you're hitting the most essential pieces. Early on, really, that was very much health and safety. So, how are you dealing with your employees? How are you dealing, obviously, with liquidity? Because many companies had to face unprecedented shutdowns. And what does that mean from a financial perspective? And how do we scenario plan around different situations? So that's really key. So I think the plan is helpful, but certainly in and of itself, wholly insufficient.
Yes. And you, Athina, how important was the BCP to you, and what adaptation did you have to make?
Yeah, I totally agree with Melanie here. I don't think anyone has been able to use their BCP plan straight off the shelf because the situation was also changing from day to day and from country to country. I mean, the decisions from different governments, you know, they were updating every hour in certain times. So, I mean, for us, I was actively working on implementing the new company business continuity and crisis management plans to be ready for the listing end of March. So when this happened, I mean, okay, we had the framework and the methodology in place, but the plans were not fully finalized. And one thing with the plan that didn't work for us as expected was actually the fact that we expected all office employees to be able to work remotely very quickly if needed with their laptops and mobile phones and so on. But the reality was that in many countries in Southern Europe, the employees were not even equipped with laptops and mobile phones. They had stationary computers and they had landline phones in the office. So of course, that was a challenge that took some time to fix before everybody could go home and work remotely. So having that war room, as Melanie mentioned, was really critical to deal with the day-to-day questions that came up and that you had to focus on. I do believe that BCP, having a BCP plan, of course, get the right processes, started quickly, and is definitely a benefit. It shortens the time for starting up activities. But I mean, the magnitude of what we were experiencing, I don't think any plan could have managed that really. How did we manage to keep the business going? One thing that was good, a good decision that we took early on was to include our HR manager in Asia, because we have a manufacturing plant in China. And we also have one major plant in northern Italy, which was hit in the beginning of the pandemic. And this HR manager in Asia has provided the group crisis management team with invaluable input based on his experience in dealing with SARS and MERS in the past. So suggesting dividing the plant and offices into different zones and blocks to keep people separated from each other during work, but also introducing different shifts for lunch breaks at the canteens to make sure that a limited number of people had lunch at the same time. You could also clean in between, not mixing people from different zones and blocks. And just simple things like, how to clean elevator buttons, properly from potential virus drops. Okay, you need to have the 70% alcohol. You should put plastic film on the buttons so that you clean the plastic instead of the buttons, because you can't really get it completely clean when you press the button. So, I mean, really simple things, but really important as well, and making our lives easier when sending out instructions to the rest of the world. And we decided early on to adapt the same level of controls worldwide. So the levels that we had in place in China and in Singapore and in Italy, we implemented those in the US and the other European countries as well at the same time to be prepared for what was coming. So that was a good decision. Thanks, Typhaine.
Yeah, so by listening to you, definitely most of the actions that were taken were really a response. It was an emergency response, basically, to the disruption that you were facing. So, and the difficulty was then, to move to a more, business continuity response, I would say, or mode. So that was the challenge. Yes. If we now turn to risk transfer, and especially insurance. When we ask risk managers about insurance during the pandemic, the following questions were quite revealing to us, I can tell you. Only 5% of them found that insurance provided their organization with coverage for the business interruption losses resulting from the company. And based on this, we could say that there is a coverage gap at work here. But then we also asked them about whether they would be interested in a non-damage business interruption product for large catastrophic events. And 60% of the respondents indicate an interest in such product. Athina, do you think it is fair to say that there is some unmet demand for insurance cover on the market? What are your own reflections on insurance and more broadly risk transfer during the crisis?
I definitely think that there is a gap, and I'm really positive to new insurance solutions. But in reality, there has been a slow product development in general in the insurance industry. And when I say insurance industry, I mean not only insurers, but reinsurers and also insurance brokers. I mean, apart from the introduction of cyber insurance and some alternative risk transfer solutions, we haven't seen the same development of insurance products in the past as you see development in many other industries. I mean, property and business interruption insurance has looked more or less the same for many, many years. I think captives are definitely taking on a more important role these days, especially when the insurance market now is hardening and has been hardening for a couple of years now. We are definitely seeing captives taking on more risks and also companies rethinking risk transfer strategies for the future to better manage these gaps that are obviously there. Unfortunately, here in Sweden, several captives have been closed in the last few years due to the complexity of the Solvency II regulations and the burdensome administration that it brings. And this is really unfortunate because this is definitely a good time to have a captive. You have so many more options. I'd love to have a captive. I don't have one today, unfortunately. Is a captive the right solution for a pandemic insurance or for an NDBI? I think it could be difficult. I don't think an NDBI insurance solution can be fully self-retained in a captive, as very few captives have that capital available to self-insure for the full consequence of a shutdown or a business interruption for months and months that we're seeing now as this global event. I think, in my view, that a state-backed solution or maybe a pooled solution between countries or backed by the EU and supported by a number of premier reinsurance companies could be a possible way forward. But I think there are also some challenges here because the difficulty with an NDBI insurance is set to an appropriate trigger. So is it third-party denial of access you have as a trigger, or is it the governmental shutdown of operations, or what is the actual trigger? And also to decide what actually to insure. So are you insuring the total business interruption effect, or is it the decline in market demand? I mean, what are you insuring? So I'll give an example. So not all companies have actually experienced a governmental imposed shutdown of their plant or business interruption in the operations. So our plants, for instance, they were kept open because they were considered critical in many countries for the production of laundry equipment and quick kitchen equipment for hospitals. But we still lost 50% of our sales in Q2, just Q2, due to the lower order intake. Because hotels and restaurants were closed, and they are a very large market for us. And in Sweden, the government doesn't even have legal means to order shutdowns of private operations, whilst other countries like Italy, for instance, do have this possibility. So if we would be successful in creating an NDBI insurance, which I would definitely support, it's really important to have the trigger and the cover clearly communicated and expectations managed amongst buyers, because otherwise we will see the disputes that we have seen between insurers and insureds lately, predominantly in the UK for Europe following the pandemic crisis. That's my take on it.
Yeah, very interesting. And from the other side of the Atlantic, Melanie, so how is the insurance market in North America? And if you want to react to some of the comments made by Athina regarding self-insurance, and captives and public-private partnership.
Absolutely. It's very interesting. Not very often does insurance take center stage from a strategic point of view. But I'll tell you, the pandemic hit, and obviously, shortly thereafter, there were a number of global regions that did order a shutdown. I know Sweden can't, but there were obviously global shutdowns, and you know, companies that are on the front lines, such as retail companies, you know, had their profits go down to zero. Right, there was literally nothing. And you know, the first thing you do is you call your insurance guy and ask him, you know, what's the story with BI, right, with business interruption. And quickly, your CFO and others learn that that BI doesn't cover pandemic. You know, and you read through it, you get legal advice, and you find out that you basically generally across the board need physical loss from property damage to trigger a claim. And so that would be more like a one-off accident, like a fire in a plant, right? So that's really what BI anticipates. And even for, you know, if you are lucky enough to have BI that is broader than that, since the SARS and MERS of the early 2000s, there's a lot of exclusionary language about viral and bacterial infections. So the bottom line is that it's very difficult to get payouts from your BI. And so, you know, most carriers are only keeping, you know, their reserves applicable to sublimit claims, not their full policy limits. And you're seeing obviously a lot of lawsuits, but carriers are continuing to fight claims for property damage and civil authority. So we're not seeing a lot of hope there. And so the bottom line is that there just isn't the kind of coverage that one would have hoped for after, you know, paying all of these high premiums, et cetera. And so that begs the question, what is my insurance strategy, right? You're paying all this money, and then for an event such as pandemic, there really is no, there's no support. So clearly we're seeing the, you know, captive market booming, and I think it's going to continue to increase, and that in addition to the hardening market. I mean, it's really gone crazy. So traditional coverage is either becoming, you know, unavailable in certain with regard to certain issues, or it's unaffordable. So I think this is the time where a lot of companies are doing feasibility assessments and looking at their overall strategy around insurance and thinking, okay, you know, what are we doing with risk? So what risks do we want to try and mitigate? What do we want to transfer? How do we do that? You know, is a captive the right decision? And if it, you know, if you are looking at that, obviously there are issues, because you know, you need an initial investment of capital, and so that's, and there's also administrative costs, right? Because you have to manage the whole the process. And so the question then becomes, is this, you know, especially during a time when companies have been struggling financially, and there have been a lot of Chapter 11s and bankruptcies, particularly in the retail space, you know, is captive where you want to put your capital when you're obviously, you know, you're competing with a lot of other strategic projects and initiatives. So I think it's an option. I think we're definitely going to see it continue, but clearly, you know, work has to go into looking at what your strategy is going to be. And then so that's sort of on the strategic side. On the flip side, where, you know, one thing we're looking at possibly, and we'll see what happens with the new administration in January, is, you know, a possible federal backstop. So much like the U.S. Terrorism Risk Insurance Act of 2002. So that was after 9/11. You know, is there a backstop? You know, from a regulation point of view, where the government will cap losses for insurers. So that's something else to see, which might you know, allow some opportunity for pandemic coverage through the more traditional means. So it's unclear. This is like a constantly evolving area with the litigation, possible regulation, et cetera. But companies are, what I'm seeing is that companies are definitely assessing options, given that the more traditional, you know, insurance approach or strategy is obviously, you know, not working for such a broad issue as pandemic. That is not event based. So we'll see what happens. It's a stay tuned kind of situation.
Okay. And if we move on now to the future, looking out into the future, we will likely see, of course, some changes which will be made. There will be supply chain changes in particular. So in the survey, we have asked some questions about that, and we see that there is almost 50% of respondents to the survey that intend on making supply chain changes. So it's about reducing dependency in the supply chain by adding new or alternate suppliers, which is a priority for 70% of the respondents. It's about revising contract terms for 59% of the respondents, but it's also about improving the supply chain transparency for 51%. So definitely this leads to the maxim that never let a good crisis go to waste. And in terms of lessons learned around the supply chain or elsewhere, I'd like to ask to both of you if you would reflect on what comes, what goes, and what stays. So basically, is there something new that you will take on board, something that you will get rid of completely, and something that's performed well during the crisis and that you will keep? Melanie, would you like to go first?
Yeah, certainly. And I can talk from a supply chain and more broadly. I mean, supply chain obviously took center stage here. Again, another issue during the pandemic when, there was an issue with shutdowns and then, so much a case of companies that were reliant on, for instance, Asian supply chains, and it was almost impossible to get things. And so what we're seeing, I think, in terms of what's coming, for me, what I've seen is really, the agile as a discipline. So typically, supply chain is something that doesn't necessarily change as often as it should, but companies are needing now to be resilient and agile so that they can respond to any change that occurs. And that really, to your point, what you said, which is whether it's looking at a more distributed approach or doing some more nearshoring, I think one of the critical pieces for supply chain is going to be speed and ability to react quickly. So we are definitely going to see, I think, more resilience built into supply chains, whatever that means for each company. But that is going to be a critical, I think, strategic pillar go forward. And so that's going to potentially retool, which suppliers we're using, how many in each region, whether we're bringing certain supply chain back to our country or somewhere nearby, et cetera. So that's going to be, I think, a big change. What's going, is exactly the opposite of that, which is a sort of much more hierarchical, complex structure. So typically, whether it's supply or otherwise, a lot of legacy companies have very outdated operating models and org structures with this hierarchical model. So when it comes time to make decisions, that just doesn't work. And we found out quickly during the pandemic that the most critical thing was speed and timing. And you definitely don't want to make decisions alone as a leader. You want to rely on others. You need to have your agile teams that you can go to and talk to, but you need to be able to act with urgency. And so I think, that does, feed into what I said originally about agile, but I think companies are looking at how do I rewire for a changing environment that drives resiliency, that allows for things like work from home and remote and virtual. So the whole world is really changing and becoming more digitized. And so all of those things that we saw pre-pandemic, it's like 10 years of change into 6 months. And so how do we rewire the org to allow for all of these changes to take place? So for me, I think we're going to start seeing that, and the winning companies are going to do the work. Sometimes it's not the sexy or fun work, but how do we rewire our operating model to allow for speed and then to change our culture to go along with it? What stays, I think, is really, for me, it was a double down on purpose and ESG and values. So, the companies that did really well, again, in the US too, where there was this social justice crisis, and there was also, there were also issues in supply chain with millions of workers out of work during the pandemic as well. So many reputational issues. And you really got to see which companies were walking the walk with their values and putting people first. And really good leaders were honest. They didn't shy away from being very open and honest about things that they were doing. In the US, you didn't have this in Europe, but probably as much. But in the US, there was, across the board, millions of workers were furloughed, so which is sort of temporarily being out of work. And how do you make those decisions in a compassionate way when when obviously the number one risk was keeping the company afloat, but you also want your people and your human element to be number one. So there were so many of these conflicting issues, and I think leaders had to grapple with this, and that's where values, I think honesty and integrity, and not running from the issues that were at the forefront, and just making sure that there was clarity of purpose. I think those companies definitely were better off. So I think we're going to continue to see, a more purpose-driven company where, the primacy of the shareholder is no longer going to be there, but we're going to start seeing that the broader stakeholder, including employees, are going to be relevant, including issues like climate change and the like. So very much, I think ESG is going to continue to gather steam in years to come. Typhaine?
Yes, thank you, Melanie. And Athina, what for you? What comes, what goes, and what stays?
Yeah, that's a very good question. Something that we introduced and that we will keep for the future, for any future crisis events, is the weekly virtual coffee breaks that we introduced back in April between the group crisis management teams and the local crisis management teams. Now, this is on the soft area. Every week we invited the local crisis management teams to a 30-minute coffee break, one for each region due to time difference, of course, and one between regions, where they together with us could share learnings, good ideas, but also share frustration, because we've been dealing with this for months and months now, and it has been tough. So just to share frustration and have someone to listen to you is really important. And this was also a good way for us at group level to get some valuable feedback from the local team. So how did our instructions work, practically in the plants and in the offices? What challenges were they experiencing? Did they have enough consumables? I mean, we were chasing masks all over Europe because the Americans actually stole them from us, or actually put a higher price on the ones that we had tried to buy. So that was also a challenge. And what were they doing in Asia to keep the number of positive cases so low compared to Europe and the US? So that's a big question, for instance. And just the fact that we were interested in listening to their stories and they could listen to each other was very well received and appreciated by everybody, I think. So that is definitely something that we will keep for the future. We will also introduce a lessons learned session sometime next year together with management to evaluate what we did good during the crisis and the following business continuity management, and what we could improve. I think we all have learned a lot during these months. What are our strengths? What are our weaknesses? How can we be more agile, as Melanie said, because that will be needed from us in the future. I think also, in my view, risk management will be more appreciated and better understood following this pandemic now. Many risk managers have finally been given access to the C-suite, including myself. This is giving us an elevated platform for the future. This will also mean higher expectations on risk management and ourselves. We need to step up and support management in a different way than most of us have done in the past. I also think that CFOs will put more attention to the company's total cost of risk that Melanie was talking about. Risk managers will have to review insurance programs and decide what is business critical and what is just nice to have, because you can't afford it anymore, to keep the insurance costs down. I think overall companies will be better prepared for future global events. For us, what goes? Well, we didn't have much to throw out the window in the first place, as we were very very much new in our company with new processes and everything, and we will have to evaluate that during the lessons learned and see what we can keep and what we should not have for the future. So that's still an exercise for us to do for next year, I would say.
Yes, for sure. It's an ongoing process, and we are just capturing now the first lessons, but we will continue to do it over the next months and years, probably. That's for sure. We will now take some questions from the chat, and I see that we have a couple of them arriving. So I just would like to remind all of you that do not hesitate to send your question using the chat box. So the first one is, how do you see the role of the risk profession evolving since the crisis, both within organizations, but also more broadly? Melanie, would you like to start?
Yeah, I think that's a great question, and it's super interesting, I think, because to some extent risk can be a bit of an unsung hero in a company and not always have a seat at the table, which makes it extremely difficult, because one of the things I have always found is that companies that, for instance, suffer precipitous stock drops and that have major missteps around strategic risk. And what we don't see enough of is risk being very much embedded in strategic planning and into the strategy process, being at the leadership table where strategy is created. So I find that fascinating, because if the risks that are the largest to the company are strategic risk, but your risk department is really much more focused on event-based risk, or some of these other more traditional risk areas, how are you ever going to address those critical risks and make sure that when you're creating strategy, you're making risk-adjusted strategic decisions? So there, and even if you look at COSO and the new guidelines that have come out in 2017, it really is all around strategy. So one of the things I'm seeing is that companies that are getting this right are really linking risk and strategy together. And I'll give you one example, is that, if you think about, the key risk to many industries, that's going to be digital risk, because even this is pre-pandemic, and the pandemic, if anything, has accelerated technology solutions, if you will. So thinking about the fact that we can't do anything in person, so we're all we're playing, living, eating, we're living our whole lives in front of our computer now. So thinking about digital risk being the greatest risk to many companies, but also the greatest opportunity. So to me, I think that risk and strategy are two sides of the same coin, and good companies are getting that right and making sure that you have those two together. So everything across the whole process, from strategic planning all the way through to risk management. So your enterprise risk management process should be directly linked to your strategy. In other words, when you end up with risks that are arising out of your ERM process, those risks should be directly feeding into your strategy planning. So the risks that you find, the mitigants to those should likely become part of your strategy, if you think about it, when you're dealing with strategic risk. So I think that's going to be a continuing shift that we see in the industry, and I really hope that means that risk leaders will be given more access and will be a part of all of these critical strategic planning processes. So I see that really changing. And then just on a last note, as Athina mentioned, I also think this is the time for risk leaders to obviously look at additional resourcing, be it financial or human, to really make sure that the processes, even these traditional risk processes such as ERM, crisis management, business continuity, insurance, all of these things are properly resourced, so that they really have meaning, and they're not just processes that become boilerplate or rubber stamping. And I think over the years, when you don't, thank God, the good news is you don't face a crisis. The bad news is that you're not really prepared, because you don't do the work, you don't do the tabletops, you don't have all of those resources to be able to bring life to these critical risk issues. And so I'm hoping and thinking that this will breathe some new life into risk departments to allow for things like I just mentioned, including, I think, scenario planning for future events. So we need to be prepared for new issues and crises that occur. I do agree. I think climate change is on the come. I think other issues, I think we're in a very volatile environment from a geopolitical perspective. And so we need to be prepared. And just because, you know, a few years go by where nothing bad happens is not an excuse to not be ready, so that when it does, we can just act with speed. So that's really the key, and hoping that that's where I am seeing some changes. Back to you. Yeah.
And you, Athina, do you see that the role of the risk manager will increase, you know, with the evolution of the risk landscape?
Absolutely, I totally agree with Melanie and her view in I hope that the risk manager and the risk management profession will change from being reactive to proactive. So sitting at the table, as you say, because nowadays, usually management calls you, the risk and insurance department, when the risk has actually materialized and they want you to deal with it. So hopefully they will be involving us in a much earlier stage for us to be more proactive and to be supportive, to be part of the table and to be as Melanie said, we need to step up as well, making sure that we don't just work with our traditional risk register, but actually start looking into risk velocity, scenario modeling, Monte Carlo simulations, and so on, to bring value, because many companies only view the ERM frameworks and processes as very burdensome and very just documents that needs to be filled, and you need to do them, you know, twice a year, and then you report to the board and so on. But actually showing value, that's the challenge here. But hopefully the pandemic and the way that we have been able to show our worth in managing the crisis could also help for the future. So I definitely believe that risk management is one profession for the future. And with digitalization, artificial intelligence, all climate change risk, everything, our world is getting even more complicated than it has been. And we need dedicated professionals to support management with this and to be more proactive. That's my view.
Yeah, so you have both mentioned, of course, yeah, the support to the C-suite, the top management, which you expect, you know, will be increased. But we have an interesting question about also the relationship with the HR department. Have you, because of the pandemic, have you seen an evolution with, you know, the collaboration with this department? Athina, would you like to respond?
Yes, absolutely. And just showing my group crisis management team, we had 10 participants in the group team, and 4 out of them were HR managers. So really, really important stakeholders, which have been very helpful in the support of the development of different instructions, you know, the zones and everything that we sent out was actually put together by the HR department. So they have definitely also stepped up, and we have teamed up together, risk managers and the HR department. So definitely so.
Mm-hmm. Has it been the same for you, Melanie? Have you experienced that?
Yes, absolutely. I mean, if you think about it, you know, there were everything from small issues to massive complex issues like the furlough. But, you know, early on, you know, one of the most commonly asked questions we got was around childcare, right? So if you think about it, with the shutdown, everyone was working from home, and you know, most people have kids, is the reality, of differing ages, and so it became incredibly difficult. Then there was the other issue, which is, you know, creating 2 tiers of employees, because some companies had employees that got to work from home, and then other employees that were on the front lines who had to go to work. And so how do you deal with that? And you know, so many questions that came about that actually had, it wasn't just HR, but it, you know, again, there were interconnected risks with reputational risk and financial risk and all of these things. And so I think the important thing is, it's not just with HR, but this is another example of agile and good leadership, is bringing together a cross-functional group to discuss and debate how to move forward on these issues. So I think, again, this goes to my comment earlier about the war room, where you need someone, you need HR, you need finance, you're going to need operations and supply, you're going to need sort of your retail or whatever it is. And so whoever those people are that are critical to making decisions, I think you need them together to be able to really quickly take the best decisions that you can. And they're not easy. And there is no playbook. But I think the beauty of the risk owner in this case is not to be the expert on all issues, but to ultimately be the glue in a way, right? So the coordinator, the communicator, the person that's holding it all together. So I think it really is an opportunity for the risk leader to shine, and to what I like to say sometimes is to create change through influence and not authority. So it's not that you have all of these groups reporting into you, but you really have an opportunity to bring the company together and to help to keep a strong culture.
And yeah, so of course we have spoken a lot about large companies, but we have an interesting question about SMEs. So basically, how can small companies cope with next pandemic or similar disruptive events? Do you think some of the risk management tools in your toolbox would be useful for small and medium-sized companies too?
I do. I think it is hard. Look, smaller companies, often it can be very difficult, but there are some tricks and some tips that they can use, and there's also some good service providers where you can sort of join up for a nominal fee to help you get all the tools that you need to organize yourself. So there are ways to do it in-house through some new technologies that are coming out and some new tools to really follow a similar path. And I think you can do the same thing with your core management team that I mentioned for a larger company. So even with smaller companies, you bring together your trusted group to be making decisions with people first. And I think, like I said earlier, doubling down on purpose and on your values. I think you can still do all of that in a really, really fulsome way, even without all of the resources to bear that a larger company would have. So definitely, I think that there are some good opportunities there.
Mm-hmm. And Athina, because in a large company, of course, you have a lot of small suppliers. Do you see an education role of the company vis-a-vis their supplier here?
You mean the supplier of? I didn't really understand your question.
Of the large group, the suppliers in the supply chain, basically.
Well, different question. I think it could be so. I definitely agree with Melanie on this. So I think also FERMA and the national associations can help. So if you have a small enterprise which cannot, bring everything to the table, you can get some really good stuff also from your sister organizations or your national organization that could help, if that was answer to your question.
Yeah, so basically the training is important. The training of the smaller organization and the support to encourage them to invest in these resilience tools.
Yes.
Yeah, we also have a questions on financing this time. Given risk financing did not fare well in the pandemic, what needs to change?
I mean, I can take a stab at that. I think, what needs to change, it's tough. So the first thing, like I said, that happened was, a lot of companies ended up having significant financial and liquidity issues in the early stages of the pandemic. So a number of things. One is that it created, I think, for the CFO and the CEO, the need to look at, how much cash you have on the balance sheet, right? So some companies figured if I have 4 months, I'm good. And so many companies then, realize maybe they need 8 months. And so, or whatever it is. And so I think there's new strategies around how do we delever and make sure that, that we have a good cash strategy, which has never really, again, taken center stage from a risk perspective, whereas liquidity for many companies became almost the #1 risk, at least in the early days of the pandemic. So I think a cash strategy is really critical there for many companies working around this. I also think, so obviously this brings into place your treasurer and strategies around that. Another thing that we really need to start doing as risk leaders is, like I said, scenario planning, whether it's around, financial. So, for instance, initially there were scenarios around what if the shutdown lasts 2 weeks, what if it lasts 6 weeks, what if it lasts 12 weeks, how long can we go? So scenario planning becomes an important tool, I think, to understand where you're at and what your key risks are and how do you mitigate those almost on a day-to-day basis. So, I don't know that a lot of companies have really implemented proper scenario planning tools and exercises as part of risk management, but I think that's going to definitely increase in the years to come, and hopefully we'll start seeing leadership understanding the importance of that also from a strategy point of view, so that when these hopefully they don't happen, but when if these sort of really large scale emergencies happen, we're in decent shape and we're not going to be at risk of bankruptcy. So that's really the #1 thing, and quite a few companies couldn't make it because of that. So again, I think really important to have those strategies in place. Typhaine?
Okay, so we will have to take a last questions. A lot are coming in, but yeah, I can assure you that if you have sent a question we have not addressed, we will post the answer on the FERMA website. So just a last question for you, Athina and Melanie. So is having risk management and business continuity management in one single department a prerequisite for successful management of emerging risk?
I can answer that one then. So, I mean, of course, it's good to have it in the same department because it's very much connected to each other. So you have the same plan, but it all depends on cooperation. So, if different departments can cooperate well enough, that shouldn't be a problem. But of course, I can see that being responsible both for risk management, crisis management, and business continuity management, I can then see the whole chain and what's missing in any of the pieces and how they actually fit together. So from my perspective, that is a good prerequisite. But I mean, it all depends on the size of the company and the collaboration between departments. So in this pandemic as well, I've worked very closely with the head of security, who is not at all in my department. He's even in a different town in Sweden. But being a small company, we all have to work very agilely together, and it has worked well. So it all depends if you're a big company or a small one and how you can cooperate. But for me, it has been really valuable to be managing all three pieces and to keep that together.
Okay. And for you, Melanie, do you think also that it could be a plus to have the two in the same unit or department?
Yeah, I mean, I'm all for integrated, integration and sort of bigger picture. So having critical functions together. But that said, I think it's really important to understand that, sometimes when you do have things off in one department, you run the risk of siloing, siloed thinking. And so this is, and it's not just for risk, it could be for anything. It's a very common in large corporations to have siloed verticals. And as opposed to, and that's where agile comes in again. And I hate to keep harping on it, but it's really, that's where you get these multifunctional teams. So I think the important thing, no matter what, because every company has different governance structures. And so, it's very hard to generalize about what works for which company. The most important thing is to have a CEO that believes in this and that is going to help you drive a risk-aware culture. because whether it's, you have everything in one, or whether you have risk with strategy or risk with, it could be in a lot of different ways. The important thing is that leadership understands the importance of this and is going to help you to drive your initiatives, because many of these things require the buy-in and the input and feedback from senior leadership. And so to me, it really becomes an issue of culture and of really the buy-in that you're going to get from the CEO down to help you to become successful in your risk-related goals. Typhaine?
Yes, thank you very much to both of you. So unfortunately, this webinar has to come to an end. So we've clearly seen that there are many challenges, but also the risk manager, has played and is playing an important contribution to the resilience, of the organization during this ongoing pandemic. So we've been very happy to collaborate with RIMS on this important topic, because we fully believe that this will help all of us to be better prepared for the next big crisis. So we can assure you that we will continue collaborating. The survey report carried out by FERMA is available on FERMA website. So thank you very much to our speakers for the time of sharing their experience, their strategies for managing the global pandemic. You will receive the replay of this webcast and the slides within the next 24 hours. And if you are a RIMAP certified risk managers, don't forget to log 2 CPD points for attending this webinar. So thank you very much for joining us, and keep tuned for the next webinar. Bye.